Hi everyone, this is Dr. Pradeep Reddy, Associate Professor, School of Management, Sage University, Bhopal. Here in this video, I would like to explain you about accounting concepts. So what are accounting concepts? So basically, accounting concepts and conventions are two tools which are very important for everyone, and these accounting concepts are also alternately called as accounting principles. So what is this? We, we have in accounting concepts, we have different aspects, namely business entity concept, money measurement concept, going concern concept, accounting period concept, accounting cost concept, dual aspect concept, matching concept, realization concept, and accrual concept. So the first one is the business entity concept. So what are these basically concepts are? These accounting concepts define the assumptions on the basis of which financial statements of a business entity are prepared. So concepts are those basic assumptions and conditions which form the basis upon which the accountancy has been laid. So let us see the first one, business entity concept. So what is this business entity concept is? Here two things, that is the business and the owner are seen at different two ends. They are not the same, they are separate. Why? Because owner brings cash into the business, so that cash is to be treated as liability to the business, liability of the business to the owner, wherein on a stipulated date it should be returned to the owner. So similarly, if the owner also uses cash for his personal use, it is treated as drawings. So he should again repay that money back to the business. So that's why in business entity concept, business is different, owner is different. And the next one is money measurement concept. Here, everything is measured in the terms of money. Since we are in India, we are measuring with rupees. For example, if we sell goods worth rupees 2 lakhs and rent paid is rupees 10,000, here we are using the term rupees. And hence we are not using any kilograms or liters in order to express the transactions. So that's why these transactions are recorded in the books of accounts and in the monetary terms only. So for example, sincerity, loyalty are not recorded in the books of accounts because these cannot be measured in terms of money, and although they do affect the profits and losses of the business concern. So, but as to the principle that we are following, everything that is paid or received should be recorded in terms of money only. And the next one is accounting period concept. So what is this accounting period concept? Here we have to follow some stipulated time frame period, that is 12 months. According to calendar year, from January to December, it is a calendar year. But according to Indian standard accounting period concept, we have, that is, we follow from April 1st to 31st of March. So whatever may be the transactions that are being happened in this period are recorded, and on why we are following this accounting period concept is we should require a stipulated period of time to prepare the financial statements. So all the transactions are recorded in the books of accounts on the assumption that profits on these transactions are to be ascertained for a specified period, and this is known as accounting period concept. And the next one is accounting cost concept. So what is this cost concept is, since we are paying price for purchasing and we are paying price for the installation and for the transportation, and we have acquired this, And this states all the assets are recorded in the books of accounts at their purchase price, which includes cost of acquisition, transportation, and installation, and not at its market price. So it means that fixed assets like building, plant and machinery, furniture are recorded in the books of accounts at a price paid for them. So that's why it is accounting cost concept, because for everything, for meeting everything, there is a cost. So that is to be recorded actually. So that's why it is accounting cost concept. And the next one is dual aspect concept. So why it is a dual aspect concept is, in India, we are following double entry system. Unlike in US, they follow single entry system, and it is called as only single aspect concept. But here in India, we used to follow dual aspect concept, and the basic foundation or basic point here of accounting is it provides the basis of recording business transactions in the books of accounts. And this concept assumes that every transaction has a dual effect. That is, it affects two accounts in their respective opposite sides. That is debit and the credit. So therefore, the transaction should be recorded at two places. It means both the aspects of the transaction must be recorded in the books of accounts. And the next one is matching concept. Why it should match? What is match meaning is, the matching concept states that the revenues and the expenses incurred to earn the revenues must be recorded the same accounting period. For example, if I am purchasing a plant and machinery, I am meeting some expenses to it. Why I am meeting expenses to it? In order to generate revenue. So whatever may be the revenue generated in a one single accounting period should be recorded, and it should match to the expenses to the revenues. So this can be done with the help of accrual concept, and if the revenue is more than the expenses, it is called as profit, and if the expenses are more than revenue, it is called as loss. And this is what exactly has been done by applying the matching concept. The next one is realization concept. This is very important, and this concept states that revenues from any business transaction should be included in the accounting records only when it is realized. So that means we should not write a transaction in its wake. But that is, in future you might be receiving some amount, but that is not real realization concept. When you receive it in actual and when it is credited to your account, then only it is called as a real expectation. That is, the concept of realization states that revenue is realized at the time when goods or services actually delivered. So that is realization concept. So a very good example is there. In order to know this is, a jeweler received an order to supply gold ornaments worth rupees 5 lakhs, and they supplied ornaments worth rupees 2 lakhs up to the year ending 31st December 2005, and the rest of the ornaments were supplied in January 2006. So here in this jewelry concept, they are closing the year at 31st December. So mere getting order is not considered as revenue until the goods have been delivered. So only the goods worth of rupees 2 lakhs is to be recorded in this. So that is a real realization. And the next one is accrual concept. And the meaning of accrual is something that is to be especially received, that is an amount of money that is yet to be paid off, received at the end of the accounting. So it means that revenues are recognized when they become receivable. And though cash is received or not received, and the expenses are recognized when they become payable, though cash is paid or not. So both transactions will be recorded in the accounting period to which they relate. So that's why it is accrual concept. Why? Because on one fine day we will be receiving that, but relating to that we have met the expenses today itself. So that's why it is accrual concept. So therefore, the accrual concept makes a distinction between the accrual receipt of cash and the right to receive cash as regards revenue and actual payment of cash and obligation to pay cash as regards expenses. And the accrual concept under accounting assumes that revenue is realized at the time of sale of goods or services, irrespective of the fact when the cash is received. So this is accrual concept. And these are all the accounting concepts. And now let us brush up once again. What are these? What are these? How many accounting concepts are there? We have business entity concept, we have money measurement concept, we have going concern concept, and we have accounting period concept, we have accounting cost concept, we have dual aspect concept, we have matching concept, we have realization concept, and we have accrual concepts. In my next video, I will give you an explanation about accounting concepts, accounting conventions. Thank you, everyone.